Welcome to the weekly Titans Show. This is your chance to accumulate applicable knowledge that makes you think and inspires taking action immediately. Every week, we get to ask the people who are living and breathing economics real-world questions and get real-world answers. This week, I'm thrilled to have with me Mr. Andy Hoffman, Marketing Director for Miles Franklin, one of the most established bullion dealers around. Andy, how are you?
I'm great. It's a pleasure to be on your show.
Fantastic. Let's get started. I want to ask you some real tough questions here. NIRP versus gold, negative interest rates policies versus gold. I've said repeatedly myself that this is the only time-tested metric that all but guarantees rising metal prices. What's your take on negative interest rates?
Well, I wouldn't say it's the only thing that guarantees prices rising of gold, and it's certainly not time-tested since it's never before in history been tried. Frankly, it defies the laws of mathematical physics. And just shows the desperation of the people who are attempting to use it. But yes, if there's ever anything out there that guarantees that gold's going to go up, it's this, because even the propaganda that I've listened to for 15 years in this business, when you take it down to its basis, the people that say, well, why would you own gold? It doesn't have a yield. Well, gold has a higher yield than a negative yielding bond. So basically we're talking about the rats running from the sinking ship. They're just running chaotically. They don't know what to do. Oh, we ran out of interest rate movements because we're down at zero, so let's go negative. And, that we've been monetizing bonds from the banks, and the banks, we bought everything. So let's just issue bonds and buy them ourselves, helicopter money. So, they're just creating new concepts now that are all bound to fail. And it's just incredible how they take the deformations that are already in the market and make them so much worse by doing these things. The debt is rising parabolically. The inequalities are rising, the oversupply of commodities and essentially everything that's out there in the physical markets because of these policies. So yes, it's a guarantee that it's going to crash currencies further.
That's interesting. You bring up the point of social inequality, and that obviously is a risk if we ever get to a real crisis that society can tilt over, even in America. But the other thing I wanted to tell you, just for the record, we did have real interest rates going to negative, but not the way it's done right now as a policy. Andy, I want to ask you another thing.
And I'll add to that.
Sure.
Yeah, we've had real negative rates for years now. That's not something new. I mean, if you look at John Williams' shadow stats, he'll tell you that the actual inflation rate has been something like 7 or 8%, as much as 10% for years on end, compared to the official GDP numbers of 2 or 3% and the 10-year interest rate,
Definitely.
Which is at record lows of between 1 and 4% around the world. It's 0 or below. So we've had negative real rates for a long time, and now we're talking about negative nominal rates.
Definitely. So, Andy, what's your take on European countries today? How do you see the European countries play out here?
I think, and I've said for some time, I think the entire Euro continent, political and monetary union will collapse. I wrote it many years ago because, trying to put together 25 countries which have different economies and cultures and financial systems, would never work. And it hasn't. And, it's so funny that people talk about it like it's, they think of Europe in terms of, well, Europe's been around thousands of years. This would be so cataclysmic if the euro broke up. But no, the Euro group has only been around for 2 decades. The euro currency has only been around for 16 or 17 years. It's barely even started and it's already collapsing. It was started on faulty premises during the best of times at the end of the 1990s. A bunch of bureaucrats thought it would be a good idea because, in most cases, because they would benefit from it politically and economically in the short term. But it didn't take more than a few years. Heck, they even started it by allowing countries in that immediately weren't meeting their financial criteria.
That's true.
The Maastricht Treaty. And here we are, 15 years later, and the countries are all on the verge of collapse. And And that includes big countries: France, Italy, Spain, and they're all intricately tied together by this currency and the debts they have together, and of course the derivatives housed in the big banks. So I've always thought that the euro currency and euro group would fall apart. The whole concept of a one continent, one world continent, or whatever you want to call it, was ridiculous because Europe has the longest history of having all these countries around that hate each other forever, and here we are at the edge of the abyss.
Yes, it's very interesting what's going on in Europe, and usually when countries are full of debt, they need very young demographics to get out of it and rejuvenate the economy. But Europe is the oldest continent in the world demographically, so their retiree rates are going up, and their tax revenues are going down.
And it wouldn't matter if they had the youngest demographics, because definitely. they have so much debt that it's unpayable, and the system will fall apart because they'll never be able to pay off their debts. And the thing is, the same goes for the entire Western world. Actually, Japan is worse. They are the worst as far as demographics by far. They're 10 years older than everyone else, and that's why their bubble crashed 10 years before everyone else. And Europe is right behind it. And by the way, so is the United States. The only thing that keeps the United States from having a similar demographic is because of all the immigrants that have been coming in from Latin America, from Mexico, which is not helping the United States' productivity any. So, and by the way, China has terrible demographics too. Really, the only places that have, quote, good demographics are like the Middle East and India, places that are never going to produce anything for the world. Heck, the Middle East needs high oil prices to produce anything, and they're not going to have that for generation. Demographics is just another nail in the coffin of the global economy, a nail in the coffin of all this debt, making it guaranteed that it will never be paid back.
Okay, well, Andy, we just released a mini documentary concerning the insane amount of currency reserves to the tune of $11 trillion that central banks collectively have, which is 20% of all global equities. The Bank of Japan is buying stocks now, and it looks like what they're doing is luring in savers who are on fixed income usually, but can't get enough income from their bonds, obviously, and they're trying to lure them into the market, trying to stimulate. What do you see happening with stocks? What kind of the troubles that you see ahead when these central banks that have such a huge currency reserve start to go and buy stocks on the open market?
Well, the thing is, I would disagree that they are doing it to lure anyone in. I think, as I said at the beginning of this call, the whole purpose of what they're doing is these guys are Keystone cops. They have no idea what they're doing. They are morons who may have once been smart but have been seduced by the dark side so long ago they don't even know what reality is anymore. They are armed with powerful weapons of mass destruction, be it militarily or monetarily, and they are using them in a desperate fashion. They have no idea what they're doing. In the case of Japan, because again, they started 10 years earlier than everyone else. They started the zero interest rate policy in the mid 90s, and they started QE shortly thereafter. So they ran out of government bonds to buy. We're talking about, this is the second biggest government bond market in the world, completely illiquid, because they bought up everything. So what do? They go, well, we got to buy something else because it's not working, so let's buy stocks. And unlike the United States, which buys through its plunge protection team, which buys them stocks covertly, they do it overtly because they figured, well, we got to tell the people we're doing something, so let's buy stocks. And it's gotten to the point now where they are soon going to, I wrote The Myth of QE to Infinity, because you can't buy, once you buy everything, there's nothing left to buy. And they are soon going to own all the stocks. Right now, they're a top 10, actually, as of last year, they were a top 10 holder of something like half of all the Nikkei stocks. And it's projected, because they now just doubled their QE of stocks policy just a few weeks ago. It's projected they'll be the top holder of all of the stocks in a couple of years. So, they're not trying to lure anyone in. They're just trying to desperately prop markets up. And the thing is, that's so funny, is it's not working. And the reason it's not working is because the world at large is selling. I just read today how, hedge funds in America, investors have pulled $100 billion out of them, just American hedge funds this year. So how does the stock market go to a record high with earnings falling 6 quarters in a row at record high valuations when investors, these are hedge fund investors leaving. We know retail investors left long ago. They lost their shirt in 2000 and 2008. So the only people left buying in the markets are governments. For instance, we know the Swiss bank. The Swiss bank discloses their holdings. They're big holders of Apple. They're big holders of mining stocks. They buy everything. And Japan has just done it first, so they ran out of things to buy first. In Europe, by the way, they didn't go from sovereign bonds to stocks. They went to corporate bonds. They figured, well, that's an even bigger market than stocks. Let's buy them first. And eventually they'll buy up all the corporate bonds. So again, we're talking about a world where the only hyperinflation that's going on is in financial markets. And there are ramifications, because they did that and they took the bonds all the way up and the rates all the way down. Now you're talking about, as you said, people being forced to chase yield, to chase into other asset markets. But that's not retail. That's like insurance companies and pension funds, which are way underfunded because of low interest rates. And all they're doing is stealing their fate further. So again, the ramifications of all these things that they've done are being wrought around the world. And the thing is that, like any classic Ponzi scheme, all they can do when these things don't work, like for instance when the Nikkei doesn't go up, is think of new ridiculous things. Helicopter money. Next they'll say we're gonna freeze the stock market at a permanent level that we decide, or something that they think will work, but all it will do is make things worse.
So, in light of all of this, what's your favorite way to protect yourself, your portfolio, your family?
Well, that's an easy one, and it's not just because I work as marketing director of one of the largest bullion dealers. I mean, the reason I work there is because I've talked for close to 15 years about what I think people should do, and that is to own. If you're talking monetarily, I'm talking worldwide. Generally speaking, you need to consider all aspects of your life and how you protect yourself given what's going on. But if you're talking about financially,
yes,
it's a no-brainer. You own physical precious metals. Around the world, in most countries, gold is at or near its all-time high. Here in the States, it's still 30% below because it's the center of manipulation. The U.S. government has the world reserve currency, and they'll protect it, like a mother protecting its young. It'll do anything. It'll kill, and it has been killing financially and in reality to protect it. So they hold the price down, and they subsidize the few people who are smart enough to save precious metals. And as far as holding cash, well, okay, you can hold a little cash, but you're getting no yield on it. Your bank may bail you out, and the government's going to hyperinflate that cash, and you may get bailed in. All these things. So there's really not a lot of options. And I think physical gold and silver is the only time-honored way to protect yourself. I have a little Bitcoin too, but that's a newer technology. And if you're in most of the world right now, you can't even get gold and silver, and the price has already surged anyway. Here in the States, you not only can still get it, but the price is subsidized. And why anyone seeing what these monsters in the central banks are saying could hold on to their money and keep them in banks is beyond me. It's just beyond me.
Interesting. Andy, you get to hear the pulse of everyday Americans coming in and buying physical silver and gold. What's going on right now with the supply, demand of physical bullion, and how do you see this internationally and in the U.S.?
Well, I wouldn't say it's the pulse of America. It's the pulse of I call it, it's not the 1%, the 1% are the quote elites that get all the free money, but it's the 1% of people who think for themselves and realize the things that we're talking about on this podcast. So it's really, I would say, the vast majority of precious metal investors, with the exception of 2011 at the very top when everyone raced in just because it was going up, are older people. It's people who've been around for several cycles. There's a lot of, I would guess that the average precious metal investor is over 55. And also because most of the younger generation don't have a lot of savings to protect themselves anyway. But
Interesting.
I would say that it ebbs and flows. But for the most part here in America, people are still brainwashed. Remember, the stock market, rigged or not, is still at a record high. And so people don't see that alarm bell, even if their own personal life is not doing well. So I don't really see, this year has been a strange one because while silver demand, at least, from the mints, is going to be at a record high, I think it's a lot of foreigners who are buying because business here has been good, but it's been nowhere like 2011, which was the last time we had a great year, and certainly not like 2008 when there was a crisis, when people couldn't get enough of it. In fact, the only two real times I can recall in the last 5 years that we had major surges of buying were after big major cartel attacks. One of them was in April 2013. The price was smashed, in 2 days by 10%, which caused a shortage. And actually, the other one was last summer when it was right in front of the Shemitah. And I really think a lot of people were so scared of the Shemitah that they went crazy buying. And it's really amazing to me that people focus more on biblical prophecies. And by the way, it turned out that nothing happened in September, than they do on looking at reality in their face, the reality of crashing currencies, of central banks destroying currencies, that people in the Western world, for the most part, don't care until they see it, until they see the crash and right in front of their face, they ignore it. And I expect that'll be the case until you either have a big surge in gold, which of course you will at some point, or a big crash in the stock market. And, you're going to have one or the other, and likely both at some point soon.
Okay. So Andy, with regards to gold and silver, if people want to get in touch and want to learn more about Miles Franklin and just doing business with you, what should they do? Where should they go?
Right. Remember, I write every day for free at the Miles Franklin blog, milesfranklin.com. I do podcasts like this, probably 3 or 4 a week. You can call us at 800-822-8080. We've been in business for 27 years without a single registered complaint. Or you can email me at ahoffman@milesfranklin.com.
Andy, I've personally read your articles, and they are top notch. It's been a real pleasure to have you on today. It's valuable information to our listeners, and what I would love to do, if you're up for it, is to have you on for another podcast at the end of 2016 for a yearly recap. And so thank you very much for doing this.
Absolutely. I look forward to it.
At Wealth Research Group, our main goal is to make sure you become better at adapting to what's going on in the economy instead of waiting for the so-called experts on TV to sell you on yesterday's news. Today we spoke with gold and silver industry veteran Andy Hoffman, and he was very direct on what he sees coming. With regards to negative interest rates policies worldwide, Andy says, for one thing, this is totally experimental, and secondly, that precious metals are a far better alternative as they are not connected to any government, therefore it can't be manipulated like currencies. At Wealth Research Group, we wrote this in a special report called Uncharted Waters, clearly warning of the consequences of these central banks stimulating schemes and how to protect and profit from this easy money plague that's going on. With regards to Europe, Andy's pessimistic and says that the Eurozone is falling apart and was a bad idea to begin with. Andy places no hope for the Western world because of the amount of retirees and entitlements owed to them. This is a good time to make sure you are familiar with investing fundamentals, and I suggest you read our 5-part series on the timeless principles of investing at our special reports page on the website. With regards to central banking, buying up equities now, Andy says bankers are buyers of last resort, and in order to show the people they are actively looking for solutions, they are gobbling up stocks. We just released a mini doc about this that we believe is the most important news of 2016. I urge you to watch our video called Jumping Ship, Central Banks Loading Up on Gold and Silver Stocks, and to make sure people you care about know about this. We also asked Andy how he protects himself in light of his forecast. And he says that there is no better solution, and he has no doubt that physical precious metals are the ultimate insurance. To read exactly what I'm doing personally, I published my personal game plan for 2016, no holds barred, right below. As with every Times of Industry interview, you got a chance to get a unique perspective on what the people in the know are doing and thinking. Keep tuning in and keep absorbing information that you can then apply to your own life and become more prepared for any economic environment. Thanks for watching this.